Welcome to Short View Trading. It's Monday, 26th of June, around 9:30 a.m. London time. Now, if you're interested in investing in markets, trading markets on a 1 to 2 week time frame, buying or selling long or short equity index futures like the S&P 500 futures, what should you be looking at? What factors drive markets on that time frame? How should you go about making that recommendation, making that trade? That's what we want to dig into in this video. The first question you've got to ask yourself at this juncture is, are markets cracking? What did last week's price action tell us? In fact, if you look at last week's equity market performance across the globe, it was really quite poor. US equity markets, as you can see in this chart in front of you now, that shows weekly performance across a range of key US equity indices was really pretty bad. The Philly SOX, where all the tech and semi stocks live, where there was so much excitement just a few weeks ago, down 4.5% last week. Equally, the smaller mid caps, the S&P 600, the S&P 400, the Russell 2000, areas of the market where people thought there may be some leadership of this equity market, also down quite meaningfully last week. And in fact, it was across the range, as you can see from that chart. Equally, it wasn't just the US, also Europe. Most indices in Europe down 2.5 to 3% last week, and indeed across in Asia. A lot of key equity markets, a lot of key barometers that you see in Asia, where you often get a good steer, an early steer on where global markets are going. And indices like the Hang Seng out of Hong Kong, or the Korean Kospi, or even the Japanese Nikkei often lead global equity markets, but equally have shown weakness of late, as you can see in this Hang Seng chart that we're putting up in front of you now. So weakness was broad-based across equity markets last week, and interestingly, other asset classes had a similar sort of message. If you look at the dollar, it looks as though it wants to start rallying, and of course generally a rallying dollar is coincident with a weak equity market. It leads to a weak equity market, so that's a concern as well. And in fact, if you look at this silver gold silver ratio that we're putting up in front of you now, that correlates quite well with the US dollar, the DXY, the broad-based trade-weighted dollar that people use to think about the dollar in aggregate. And it looks as though the gold-silver ratio is suggesting further dollar strength. And in fact, if you think about the dollar over recent months, the DXY has found pretty good support around 100 and change level on several occasions since February. So other assets are starting to confirm that price action weakness that we saw across global equities last week. And on top of that, one of our key indicators early last week, our sell-off indicator, which is designed to pick local highs in global equity markets on a 1 to 2 month basis, signaled as of Tuesday, Wednesday last week, when it reached its key plus 20 level, as you can see on this chart that we've been putting up in front of you. So the question was, how do you play it from here? Was that simply a minor mini wobble that's played out, or is this the beginning of something more sinister? And that's what we get into each and every day in our daily RAG, also known as the RAG Trader, our 1 to 2 week outlook on equity markets. That's available via the website, or simply click on the link below if you want a free trial. If you want to think about markets on a longer term 1 to 2 or 3 month basis, not just 1 to 2 weeks, if you're thinking that longer term time frame, then our tactical publication is the most relevant. Simply email us at info@longvieweconomics.com and we'll get you engaged with that. So what are we watching today and this week in markets? Well, there's a lot of central bank action going on. There's a ECB central bank forum meeting in Sintra in Portugal, where central bankers from around the world are gathering to discuss key monetary policy issues. And Jerome Powell will be there, Christine Lagarde, Andrew Bailey, Ueda from Japan, a whole bunch of them discussing key issues on monetary policy that will come out over the course of the next 2 or 3 days through to Wednesday. That's key. That'll be watched closely. In terms of macro, I suspect the key data point is PCE deflator out of the States on Friday. This is the Fed's preferred inflation gauge, and I think that'll be watched closely, along with Chicago PMI on that day. And elsewhere, there's bits and pieces of data all week. So all of it quite interesting. None of it's sort of the top stuff, but certainly interesting take on consumer confidence from across many of the Western countries, including Germany, France, and the States, and also lots of other bits and pieces like Eurozone M3 money supply, durable goods out of the States, and so on. So that's it from us. That's your morning market hit for Monday, 26th of June. Thank you for listening. Please do subscribe on YouTube. Simply click on the subscribe button and follow us and like us and share on social media. We'd be grateful for that. Or follow us on Facebook, Twitter, and or LinkedIn. Thank you for listening. Stay safe. Trade well.